Welcome back to the weekly Brooklyn property market update, brought to you by Engel & Volker's Brownstone, Brooklyn, of course. My name is Katriona and I'm joined again by Donald. Good afternoon, Donald. We're doing this a little later than we normally do in the day.
Yeah, but it is quite cloudy out there, so it's not actually dusk yet. It's just major storms about to roll through, so it's getting a little dark. Could start raining anytime.
Yeah, it looks like it should be dusk. So let's look at the 16 key markets that we track and the data that we have for those markets. So we've had 52 weeks of highs in the luxury market for the new to market and in contract listings when you look at a 4-week trailing average. So can we expect that to continue in the luxury market?
Yes, but something else, understandably, the new to market listings being elevated about 12 months ago as we're moving out of the New York State on pause here, we can kind of expect that, but now we've exceeded that height already. And the last 2 weeks trailing data, we're actually moving down a little bit right now. So coming off those highs, which were records basically for new to market, and also more recent in contract numbers as far as volume goes. So both good to see. Nothing wrong with a little bit of a pause once in a while. Can't go uphill all the time forever.
Very true. So what's perhaps contributing to that slight slowdown, downward trend for those new to market numbers in the luxury market?
So the seasonality here in the marketplace in New York City, like many other places around the country, and this time of year is when we're heading into a period of time where sellers themselves may be just kind of leaving the market out of their homes and going either traveling or moving somewhere else for the summer months. Also the buyer pool is also doing the same thing to some degree. So just fewer participants in the marketplace is what that reflects primarily. But I just want to point out here, if you're a buyer, and you are intent on getting a deal done, now's your time. So, just don't walk away over these next 2 months. Stay close to it, stay involved. Again, if you need help, don't hesitate to reach out. But with less new things on the market, doesn't mean inventory across the board has dropped, just new to market listings have dropped. So there are quite a few things out there, whether you're in a condo, co-op, or townhouse buyer, now could be your time to make a deal that works for you.
Definitely. So if we look at the below 2.25 million market, it looks more of a plateau in terms of the new to market and in contract listings than a downward trend.
Yeah. And almost beginning of this year, back in January, for in contract numbers, we're in a bound range of 80 to 100 per week on a trailing 4-week average, and that stayed fairly consistent. So it is kind of flat. The new to market is kind of moved up through that line back in January, the 80 listings per week, and went as high as about 110, 115 actually on a trailing 4-week calculation. And has dipped down, but still above 80. So still elevated, lots of activity, both on properties coming on and buyers acting in some cases quite quickly. As we know, we've mentioned numerous times, the $3 to $4 million price range for townhouses, certain neighborhoods, very competitive, huge demand, not enough supply.
So I was reading in yesterday's newspaper that across the rest of the US, buyers are really struggling if they can't put down 20% if they're financing and they're trying to win a bid. And according to the National Association of Realtors, who keep records on these facts, in April alone, almost half of all the existing buyers had to put 20% down in order to secure a bid. And in the 10 years that they've been keeping records, there are only 3 times when that percentage hit or exceeded 50%. And those 3 times all happened last fall. Now we know that New York's different. It's different in many ways. The property market works differently. The amount people are expected to put down is different. But let's explain to people why this statistic actually matters.
Yeah, it was very interesting. Those are certainly high percentages for equity to the debt that we don't see here too often, only in certain circumstances. But it is, I think, a reflection in one way of the competitive aspect of many marketplaces out there where, again, not enough supply and demand way in excess of that amount of product. So I guess, it certainly can be used to competitive advantage to make a deal look more attractive, more likely to close if it's financing contingent with that type of debt to equity ratio, 50-50. A lot more room there, obviously, than if you're at 20% or less, if an appraisal didn't come back supportive of the transaction price. So it's understandable there, but it is really kind of interesting that there's that much equity available and people also willing to commit that to their housing. So I'm super intrigued as to what those housing types are, primary or non-primary, and where they are. And I've heard, not too long ago, a few months back, somebody say that a lot of buyers in this particular agent's marketplace, which was out west, is that people are accumulating homes as opposed to kind of moving, divesting, trading up, and so forth. So I'm not sure if that's at play either, but super interesting.
Very interesting. So that's it from us. Check back in next week, of course, for more accurate and informed observations on the Brooklyn property market as we approach the very last week of June and the July 4th weekend. See you next week, Donald.
Take care. Have a good one.
Bye.